have with us the authority, also known as the father of modern financial derivatives in India. We are here and very proud to have with us someone very special as part of the National Stock Exchange, don't we?
Absolutely. Considered one of the most foremost experts, in fact, in financial market policies. I'm talking about none other than the Managing Director and CEO of the National Stock Exchange. Ladies and gentlemen, put your hands together for Mr. Ashishkumar Chauhan. He will be in conversation with Senior Editor ET Now, Ajay Sharma. Over to you, gentlemen.
Thank you very much, Chauhan. Gentlemen, first of all, I'd like to thank all of you out here, not only for this evening, but also for the love and support and all the contribution you have in making our journey for the last 15 years. I know that in almost all of you here have been part of this journey for the last 15 years in some capacity or the other. So a great, a huge thanks from the entire team of ET Now for doing that. All right, so man in the hot seat now is Ashish Chauhan, who's the MD and CEO of National Stock Exchange, a technology buff at heart, a very spiritual person as well. He's been guiding us in various capacities. So thank you very much for your support for the last 15 years. Today, of course, the topic of discussion is India at 2030. I'll take a clock back. Everybody knows him from his position at NSE, his days in BSE. But I'm sure not how many of you actually know that he was part of the core team at NSE when NSE was actually being founded. And when NSE was being founded, the market cap of India was 4 lakh crore. Now it's 450 lakh crore. So, sir, thank you very much for seeing all these, the developments which are happening in our market and the shape and size and form and technology, all of that. What are your observations of where we are heading in the next 6 to 8 years?
First, let me congratulate ET Now and the entire team for completing a glorious 15 years. It has been a good time for India last 15 years and probably best wishes for next 50. So then having said that, I think in last 30 years since NSE started operations in 1994, in $394. So broadly, we are completing 30 years now of operations.
So we're almost at the same age in a way.
Yes. And what we have seen is nobody had given India a chance then. And nobody had given, of course, NSE a chance. But both have kind of done so well that 4 lakh crore of market capitalization has now become 430 lakh crores. That is 4.3 crore, more than 110 times. And that's a pretty sort of significant jump. Even in dollar terms, it has been probably 50, 60 times. And many times I say that America needed a Warren Buffett, India needed a Nifty, right? So in some ways, if you had invested in Nifty then in 94, 95, you would have done better than probably Warren Buffett in dollar terms also. And that, I think, in some ways, that when you look back at the past, you can't predict the future based on the past. But you can make your own judgments on what has happened. One of the larger reasons why India did so well is because of the services. I think Governor RBI also pointed out that it's a recent phenomenon. But for me, NSE was also the mother of IT in India. It was the first large IT project that actually got completed and was used by public. And literally every IT company of India used to bring their customers, potential customers to NSE to show that India can do that. That's how Y2K came and stuff like that. Why I'm telling you this is because if India, like today, I was reading even while sitting there, that Goldman Sachs has said India's services exports will grow to $800 billion by 2030. And if that is so, then you are actually going to be in a reasonably good current account position. Today, you are still 1% deficit. You are going to be slightly or even large positive going forward if you continue to be on that territory where the services keeps on growing. And that has been the story of last 30 years. We were always perennially short of capital. Yeah. We were perennially short of foreign exchange. And today, after 30 years of NSE, NSE being there, not necessarily because of NSE, but after 30 years of NSE being there, you can see India has gone into a different trajectory. And the technology actually makes the world change. The wealth gets created by technology and faster. The last 30 years have been a trailer. Next 6 years or next 30 years will be actually where the action will be. And India is at the forefront. In many of my lectures, I say that in last 2000 years when technology race was being run, India was not even in the stadium. Today, we are at the forefront. And next 6 years are going to be humongously different for India. Many people think that AI is going to hurt Indian services. Actually, is going to increase the number of jobs many times. Because each time a new technology comes, like when I joined bank, IDBI Bank, in those days, IDBI it was, people actually went on strike saying that the computers will take away our jobs. And today, after all automation, there are 10 times more or 20 times more people working in Indian banks than those days. Right. So each time a new technology comes, it's just that the older people who have not learned newer technology might become obsolete, right. But the newer people are going to get newer jobs. That's why for me, my hope is that next 6 years are going to be phenomenal for India. Of course, the infrastructure is getting built, but the soft infrastructure which we are working on is going to be again helping us create that wealth.
In fact, you have told us earlier, I remember that when we were throwing stones at each other, bow and arrow was technology. So technology actually improves efficiency and expands the market. Technology in our space also has expanded the market from the COVID lows. The amount of addition we've seen in retail investors, HNIs in our country and growing, and that is not stopping. Where do you see role of technology in expanding the market and also making it deeper? Because now we are seeing $1 billion, $2 billion here and there. Many times we see cash flows 20, 30,000 crore and the market doesn't even wink.
Again, when NSE started, we had probably give and take 20 lakh investors. It is like Birbal's crows, you know. Nobody knew how many investors are that, but give it 20 lakh. Today, 10 crore PAN number unique investors. It's not a survey. It's not a guesstimate. It's exactly, I can tell you exactly how many number of investors. We are at probably all the PIN codes in India except probably around 30 PIN codes or so. And most of them are actually airports where nobody stays full time. Effectively, we have reached out to the entire country. Now, having said that, 10 crore investors is actually 7.5 crore households. 7.5 crore households is actually 20% of India's total households. India has become rich enough in those 20% households that they have not only got income, but they have savings. And not only savings, which they put in banks, but now they have graduated into the markets. And this is direct investments. If you take through the mutual funds, EPFO, and NPS and everything else, it could be probably 20 crores or 25 crore people who are directly or indirectly exposed to the equity market risk, right? And it's a phenomenal achievement of India. What I say is that what we have done, I mean, economic theory tells us that a country having per capita poor income, like we are still below $3,000 per capita, such countries cannot have a well-functioning capital markets because poor people don't save, and even if they save, they don't invest in their brother's company. How will they invest in an entrepreneur sitting in some other place? You know, today, a person sitting in Dibrugarh or Jorhat or Srinagar is putting her hard-earned 1,000 rupees into a company in Salem. She's never going to visit, but she has a complete confidence in that entrepreneur that he will not only use that money well, but also when the profit comes, will not siphon it away, will give her some dividend. And she has complete confidence, of course, in India's parliament, in judiciary, in regulators, ministry, exchanges, but more importantly, that investment is being made on the name, on hard work of the entrepreneur. So for I say that India has become very trusting of its entrepreneurs, and it's a great leap of faith, I can tell you that.
Right.
Poor countries are not supposed to have that. There are books written. I have done many of them on my mobile also. I read books in mobile. But most economic theories suggest that such a country cannot have. And we are today 4th largest by market cap after America, China, and Japan, fourth largest in market cap. If we were a country as a 10 crore investor, we will be like 15th largest country or so, and so on and so forth. Why I'm telling you this is a phenomenal achievement of trust. Creating trust in people via mutual funds, via NPS, via EPFO, via direct, it doesn't happen in most economies, right? And that's the, what I call, a beautiful part of India, that it has become very trustful of its entrepreneurs and also its overall system. But it's going to take us far, because the next wave of wealth is not going to require too much capital. I call it capitalism without capital, or capitalism with very little capital. Earlier, if you have to make a lot of money, you have to put in a lot of money in factories and all.
Sure.
Today, you have to make a lot of money, you have to put in a little bit of money, and then
The wave.
it may take up, like we have seen examples of Infosys or Wipro and so on and so forth, right? And that has created a number of literally thousands of people wanting to do that. And sometimes you feel that every trespasser is getting funded by PE and VC. In fact, my estimate is that out of 10,000 startups, probably 5 get funded, 9,995 have to struggle, and most of them close down. But if they come to markets, small companies are also able to raise funds. In last 12 years, since the SME market started, I think 970 companies have raised around 15,000 crore. And today their market capitalization is close to 2.75 lakh crore, right? So effectively, the small little guys are going to create great wealth, because some of them will literally take off. And if they remain disciplined from beginning, because the market brings that discipline of transparency, they will actually grow faster.
Ashishji, tell us about, is this wealth effect actually being witnessed across the country, or is it concentrated still like it were some years back in Ahmedabad, Bombay, the bigger cities and very financially savvy cities? Because you do share data, the footprint of the market, not only the depth, the numbers, but is it witnessing a massive broad basing of ownership of Indian
Absolutely. Yeah, for me, as I told you, they're in almost all PIN codes. And this is not because government has forced it on somebody. This is not Jantar Aadhar Mobile. This is out of volition of people, out of their own action. They have to actually work hard to become an investor, right? And so I was recently speaking at Uttarakhand, and I thought Uttarakhand is a hilly area. Very few places are sort of approachable, and they would probably have lesser number of investors. But literally, they have almost 9 to 10% of the population registered with us with their PAN numbers. Now that is a revelation, because similar numbers are there in Gujarat or Maharashtra or other places. UP recently became larger in terms of the number of people getting added. But today now it has become, after Maharashtra, second largest in terms of the overall number of investors, and so on and so forth. So why I'm telling you this is that equities market are here to stay, and they are getting accepted by everyone, thanks largely due to the mobile technology, that it's allowing people to come in faster and also check that whatever their wealth is through mutual funds, because we also distribute mutual funds. So in some way, I always tell people that don't overtrade, don't trade day-to-day basis, even if they watch TV.
But do they listen to you? The numbers say that they don't listen.
No, they do. It's just that we want to pretend they don't.
No, but the gamification of equity, which started from the COVID lows to now the volume which we are seeing in F&O side, what are your thoughts on it? The governor
I'll
also
tell you
mentioned
this,
towards it.
many people have not gone through those numbers, because 30 years of NSE. In the best of times, we have, I think, some of the veterans who used to go on floor, 2 of them I can see.
Right here.
Right? And ask them, best of times, Harshad Mehta's situation, which was like still for many of us, was like the highest of high in terms of speculative fervor. 10,000 trades a day.
We are nowhere near, right?
No, never. I mean, it's...
Not even close.
Yeah, so 10,000 trades a day used to be there, okay? Max 10,000 trades a day. Just to settle them, to even figure out whether actually that trade happened or not, used to take us 30 days. To settle, just between the trader saying, you sold 100, I bought 100. Otherwise, that guy will say, no, I sold only 100, while it is 1,000 and stuff like that. So from there, within a year, when NSE started taking off, 11 months, we were doing 1 lakh transactions a day. from 10,000 to 1 lakh, people used to tell me that this is speculative fervor. In fact, great Mr. M.G. Damani used to be saying that you are now automated and this is becoming basically over trading. Why I'm telling you this, automation allows you to do things faster. That doesn't mean it is adding risk. See, risk is at two layers. It is at the systemic layer and at the individual layer. At systemic level, the total outstanding open positions on India's derivatives market is around 19 lakh crore as of date. The total marginable positions, that is, if you take delta hedging and other things, because derivatives are very complex, you buy the one stuff and then sell in the same month or same week another series. So if you take the total margins, is around 1.9 lakh crore. Today, NSE's clearinghouse has 7.5 lakh crore as the margin money available, collateral available. Okay. So systemically, there is no issue. Individually, yes, people may actually do things, and that's why some of the riskiest instruments like derivatives, small investors should stay away. Sure. And they should be kept away so that it doesn't bring basically a situation where small investors can get hurt. And that is, it's exactly like what you don't give knife to a child at home, right? Knife is a useful activity,
so
useful instrument.
If you know, for a novice trader is actually handing over a knife to a child, so it can get hurt.
And for me, it's better they go through mutual funds. At least if they want to study hard, they can do direct investments into equities. But society has to take that call, that do we want to allow this or you want to do something else?
Right. This entire investment renaissance which is happening in our country, and retail investors are latching onto it like never before. NSE has been the big beneficiary as well. We saw your latest numbers. Many of your, the audience I know many of them are your shareholders as well at the NSE. And there's a special request from their side to ask you, when is the listing happening? How is the progress on that? Because on the unlisted side, we keep on seeing almost 6,000 rupees now in a matter of, it has more than doubled. So give us some, some thoughts to think about. How's the progress on listing?
No, I don't have any comments on listing. Okay. But the way we look at it is our main job is to act as a frontline regulator. Sure. We also provide service, so we make profits. But that is a byproduct of a job well done.
Well done.
Right? If we miss out on the regulatory framework, that profit has no relevance. Of course, profit is for the shareholders. Yeah. They own it. And employees have no right over it. So people may think that the CEO may be getting great bonus. We don't. But effectively, for us, our job is to be the most compliant exchange in the country and continue to help India create wealth. Help in wealth creation of the country. And if country continues to benefit out of our activities of regulatory type, they will continue to reward our shareholders with some profits. But profit in our kind of a situation where we are frontline regulators cannot be the main purpose. Sure. Unlike even a bank or a PSU bank has a profit as purpose, ours is regulation as purpose.
Okay, before I let you go, just one quick word. You travel across the world very often. You were recently in Japan launching indices for Nifty, over there for investors. Though FIs have been big sellers and retailers have kind of bought them out completely, your interaction with global retailers, global big funds, is India actually coming on their radar as an asset class in its own right?
No, it is. I mean, India is exciting. They don't know how to come. They think it's still, they have to get involved by putting in some money. They are trying to go through fund of funds and other things. And so people have started now, in a way, wetting their feet. But India is exciting. There is no doubt across the world. Wherever you go or whoever comes here, this is, in some ways, India is making more waves and largely on its own strength. Merit. Because although foreign money has not come in a big way in last few years, but India on its own is doing great in terms of the growth, in terms of the market capitalization, in terms of doing things which the world world cannot do, like UPI or like other things, which they are very amused in a way that how come a rich country like Japan is not able to have their people actually use mobile technology to transact or to do governance, whereas India is able to do it. So it's a kind of a conundrum that's still trying to resolve. But one thing is sure, there has been a huge upside in interest for India, and naturally the infrastructure that is growing now with leaps and bounds, I'm sure.
So by 2030, I've got just 30 seconds to ask you this. You expect this structural move of towards financial assets from retail, the retailization of market to continue, or do you see some hiccups there?
See, I say that the people are becoming richer, although we may sometimes, our commentators may not want to believe because they have a politically different ideology. But India is actually becoming richer even at the lowest level. And that money is going to come and get invested within India most times. And today they've found the stock markets because they are easy, liquid, on mobile you can do things. And that's where, for me, there is going to be more and more retail people coming into the market. And it's a good for the country, where they are able to participate in capital formation, invest in companies, same companies create jobs. Sure. So it's like you are creating a virtuous cycle of investing in those companies from the employees, and then they create jobs, and then those new employees come, and then they put in the money in the equity. So we are creating a good virtuous cycle, and we are growing at our own capital. Of course, we are able to, if we are able to get capital from abroad, we will be able to accelerate our growth faster. But
that will be icing on the cake. Absolutely. But the big headline coming from Ashish Chauhan is that the structural move of financial assets is going to continue. Retail investors are not buckling down anytime soon. So I've answered one part of the question. The next part of the question, what to buy, Aisha will take the action forward later with some of the biggies of the market. Thank you very much.
Thank you so very much, Mr. Chauhan. In America needs a Warren Buffett, but India needs the Nifty. I'm sure you said that, and everyone will certainly agree.